Traders, please note, next week is going to be spicy. We have tons of news. Here's the economic calendar for the whole week. And as you can see, we have tons of news, but especially on Wednesday, we have one of the major events of this year, or so far of this year, that will be the possible rate cut of the Fed in 2025, after we are having some interesting data, some reduction, or at least some good numbers in inflation. It might seem like the Fed have some motives to reduce the rates again. If we remember the last year, at the end of the year we got 3, even though the Fed said that for around February of 2024 we will get the first cut, but we had to wait until end of the year. This time it's possible that we get the cut, but markets will react in any case because gold currently is very strong, as it's been since COVID and the money printing situation. As you can see, we have a new all-time high at around 3005, but the psychological level will be at 3000. And here we have the orange box that is pretty much the range area. We need to wait for every news to hit. There's also these tensions with the geopolitical issues. There's the situation with the Russia-Ukraine war that are trying to get the peace sign, but for now it's nothing official, so we need to expect that nothing will change so far. And we also need to mentalize that maybe the rates won't change, so in that case gold will remain very strong. Remember, this is not attractive for investors. Even though also the price of gold is very high, it's not also attractive to buy at all-time highs, so really the market needs a retracement. So expect market, if we get any rate cut, here we have all the possible retracement areas, because even if we get 25 basis points or 50, everything will be just a retracement and a correction, because gold will remain strong. And every opportunity of retracement, big investors will take it as a buy opportunity to crush this new all-time high, or at least to recover some of the, or make some money, because also there's stock traders in some areas that will get chased down because the price will go naturally down. At one point, price cannot sustain this big trend, so it needs to get some liquidity. And we have here some interesting points for you to have the eyes, or at least mark your charts in these areas. And also, if we get the rate cuts or not, you need to be at least be reactive. Don't try to predict any type of move, just be reactive and have your charts marked so you can take positions. As a hedge trader with no stop loss, I really don't mind what price is going to do, but I consider this area very dangerous for any type of trading that is long term, or at least swing trading. For scalp and shorting any of these areas or buying, this orange area is considered a good, we could say a good range. Let's go to the 2 hours so we can see it more clearly. We have tons of wicks. It was natural because we broke or pushed mainly on Friday, so at the end we got no pressure or no liquidity left because everyone closed positions. That's why we get these big candles to the downside, people closing positions. As mentioned, this is a good area to TP. 3000 was a very hard psychological level we didn't expect it to reach in 2025 after the 3 rate cuts, but with all the situation with Trump and Elon Musk and the geopoliticals, the dollar is really not recovering, even though we have good news with the unemployment and now with the inflation. Also, the jobs are being created, but we need to compare that versus the price or the consumer index, or how expensive it is to live for, we could say now in the USA, because you can be winning more or you can have a lot of employment, but if prices of goods are very expensive, that makes no difference. So the situation here is that gold remains strong, so every piece of data for now will benefit the dollar, of course, but will be only seen as a retracement until we get the rates as low as 2%, or the inflation is controlled, or the recession FOMO is out. And for now, with Trump not working together with the Federal Reserve, we cannot consider that gold will be weaker against the dollar, and it most likely will be breaking all-time highs for now, or at least we will be retesting the 3000 area, and this orange box will be the low. So for now, that's the support and this is the resistance. So consider that for long-term and short-term trading. Have a good one, Gis.